Hey, hi, I'm back, Kaushik Chatterjee. As you know my name, I think I don't need to introduce myself, right? So, quickly, in this video, what we are going to discuss? We are going to discuss about share market and mutual fund. It's also one of the most even important tool on the investment side. If you look out, almost even 10 to 11% people even they will be investing on the same tool. Now, what exactly mutual funds? How I can make my money even in mutual fund? What exactly share market? How can I make even my money even in share market? So we are going to discuss even all this in details, like how a share market works typically, how a mutual fund even works typically, and what is the pros and cons on the both even mutual fund and the shares, and what exactly even I can expect even from this investment, right? So let's start with first with mutual fund, and most of the people even you will be knowing like mutual fund terminology also. So when I'm talking even about mutual fund, so let me tell you a brief about mutual fund first. Mutual fund is a typical fund, I can say, and that fund will only work towards that fund only. I'll just repeat it once again. So there will be different companies, they will be launching even with their different fund actually. So let's say I'm just giving an example. Let's say energy fund, let's say oil fund. I'm just giving an example. There are a lot of funds even in the market. So I'm just giving a name of out of it. So if I talk about energy, if I talk about oil, whatever name I just already told you, so entire money, whatever the money even pulling out from the let's say public, right? So again, it's a pulling of fund. So mutual fund is whatever the investment, whatever the entire fund. This is entirely even the pulling fund only. The entire public, whatever they are investing, that money, entire money, it will be invested towards that particular even fund. So if it is energy, it will be invested towards the energy. If it is, let's say, a kind of oil, it will be invested to the oil itself, right? So this is the typical way a mutual fund actually works. Now, if I look out like how I as an investor, like what I can invest from the mutual fund. So I'll tell you typically, see, mutual fund even nobody can give you a guarantee, because again it is all even market related. Again it is how about the fund is growing. Again it is how typically the ups and downs are going in the market, right? So nobody, no company, even no even particular fund even can give you a certain even assurity, like okay, if you invest this much you can go even get even out of this by this time. So no, there is no guarantee. So that is the one way. If I look out, that will be one of the cons also. You can start the investment even with a 500 money also. So there are two types of investment, that let me tell you first. One is you can invest even all your bulk money. Let's say I have some dump money, let's say it is 1 lakh, 10 lakhs, 1 crore, whatever it is. You can invest even a one shot and you just forget it, how market even working, how even it is ups and downs. Based on that one, your fund also grows, and fund also even ups and downs, whatever as per the market it is happening. So this is one way. It's a lump sum you are going to invest, right? The second option, it is SIP. We call it systematic investment plan. How it is? So when I'm talking, even the name itself you can understand. The investment plan, it is very systematic. That means each and every month you have to invest even a certain amount of money. It is not mandatory. I'm just telling you the option. So one way, lump sum, as I told you. So whatever lump sum amount you have, you can dump it all together and you just forget it. Based on the market scenario, it is just up, downs, whatever it is happening for a certain period, you just leave it. How the market is performing, based on that one, your entire fund also will perform. That is one way. Second thing, the systematic investment plan, which is fair even against your lump sum amount. Now you can get even some good money also in this way. First of all, your investment will be very systematic. That means each and every month you can start with 500 rupees also. Even you can go even more than even 500 also. 500 should be your limit. So what I meant to say, let's say today if I start a investment, even a SIP investment, and my minimum investment should be 500. So I can go even multiplier of that also. Tomorrow I have some more money, you can invest even 5,000. Tomorrow you have some more money, you can invest 10,000, 1 lakh, 1 crore, whatever you want, you can invest. In a systematic manner, you are investing, right? So here, what is the major pause? If I look out, the pause is my commitment is not fixed. Either I can go off, either I can go down also, and limited. As I told you, the 500 is the minimum amount. So 500 is not a huge amount, and that even you have to plan it out. So you can even do even any point of time. But normally what happens in other tool, let's say in other parameters also, if I look, no, you have to pay even certain amount of it. But in this case, I'm just looking this the pros, because this is not a commitment. Above 500, I can go as per my wish. So you understood what is the cons, what is the pros, even as per the investment. What is about the lump sum investment, what about the SIP investment also. Now, how typically, as I told you, the fund, even how this fund, the name will be, even how towards this, how the money will be pulling out, how this money will be invested, all these things even we have discussed. Now, how can I rely on this investment? How can I rely on this particular tool? So as I told you, there is no guarantee. As market grows, as market goes on, similarly, the same way, even this money also will be fluctuating. If it is goes up, if it is goes down, right? Now, still, what kind of prediction you can look at? So there are two things. As I told you, systematic investment plan will also make you understand that each and every time. Let's say now I'll come into the details. If you talk about this lump sum investment, as I told you in the beginning, like jumping on lump sum amount, 1 lakh, 10 lakhs or 1 crore, whatever it is. So you are dumping in one time. Now imagine this entire market, entire the whole, even my investment and whole my fund, how it is going to be, how it is going to be making the money. So this all depends on the particular NAV amount and the unit price. So what is NAV again? If I look out, NAV is net asset value, right? So particular share, let's say particular, let's say fund, if I am, let's say, investing, and let's say it is towards energy, towards it is oil, whatever I said. So on that day, what is the unit price? So let's say I'm just investing, let's say 1 lakh, and just imagine that particular day, actually the NAV rate for that particular fund, it is around 10 rupees. So what is my investment? 1 lakh. Divide by 10. So what is the total unit I am going to get? It is 10,000. Are you clear how this money is going to be invested? So I'll just repeat once again. As it all depends on your NAV value, net asset value, right? And what will be my unit also out of it. So I am investing, let's say 1 lakh, and particular that day, that let's say that particular fund, even NAV price is 10 rupees. So 1 lakh divided by 10 rupees, how much? 10,000 unit I am going to get particular on this fund. Now tomorrow the price goes up. If it is 10 rupees today, if tomorrow it is 15 rupees, day after tomorrow it is 20 rupees. So based on my unit price, it will be multiplied. If it is 15 rupees, then my money in my fund will be 10,000 multiplied 15. If my unit NAV price is 20 rupees, then my 10,000 multiplied, it will be 20 rupees. Like this, my fund, my corpus is getting created. But do I have a control on this 10 rupees, on 15 rupees, on 20 rupees? The answer is no. That's why whenever I can say you only one thing, whenever we are investing, let's say in a mutual fund like a tool, so what I can predict, we cannot predict anything on the returns. But what I can suggest you, yes, the fund what we are investing, you have to look at this, the inception. Inception means when this fund actually started. It could be 5 years, it could be 10 years, it could be recent also. My suggestion, if you're let's say if you are investing on this SIP, if you are investing on the lump sum, first you have to check it out last 5 years how this fund is performing, so that you can have a guess, like, oh, this is the exact performance this fund is going to give. So if it is, let's say, average even 15, if it is average 10, if it is average 12. So what I meant to say, again you cannot predict that it will be another 5 years, it will be 10 or it will be 12. Even it can be 20 also, it can be even 50 also. But what I meant to say, you have something in mind like, okay, past 5 years this particular fund even given this much returns, which is fair enough if I compare to any other tool like earlier we have already spoken. So fair enough if I'm getting 2-3%, even not even guaranteed, but still if I'm getting 1-2-3% even more out of it. But there is no guarantee. But how can I choose? How can I wisely I can invest? As I told you, last 5 years or last 10 years, if the fund is more than 5 years. So whatever the investment happened, whatever the fund even performance, you can have a predict. Okay, if it is 15, okay, chalo, I'll just take it off, let's say for 10% on a fair returns. On the 10%, my fund is growing, and if this way even the NAV rates are changing, so what will happen? Tomorrow this fund will be exactly even on this unit, and if the fund is performing 15 rupees, 20 rupees, 30 rupees, whatever it is, so my amount will be this much. So I'm clear. I hope now you understood what exactly when I was trying to say. Invest wisely, understand SIP, understand lump sum investment, understand the fund manager, understand where and all this particular fund is going to be invested, how far this fund is going, how long this fund is old actually. As I told you, typically if you ask me, it will be at least more than 5 years. And how, on what base I am going to get my returns or get my corpus, that is on your NAV price. You are going to get the units, as I told you how to calculate on the same. On that particular unit price, I am going to get my lump sum of this. Clear? Now, once I tell about share market, then I'll give you a fair idea, like what is the fundamental difference between a mutual fund and shares. It looks same, it works in the same parameter, but there is a fundamental difference. Now, if I talk about now share market, so share market again works in the same parameter, but here you are not going to invest only on particular fund. You are open in the market. You are open in the on stock exchange. If I talk even Bombay Stock Exchange in India, if I talk about NSE, that is National Stock Exchange. So any of the stock exchange, you can even invest your money. Either you can do it by your own. You know the format is you have to go for a bank even prescribed even demat account. Through that even you can do the transaction. So whatever your money deposit, whatever your money you are earning, so every transaction it will be done through a demat account. So any bank, any nationalized bank, if you go, even there are a lot of even ad you might see, even a lot of bankers might have called you, so you can take a help of them, or else you can visit you wherever you have an account already. You have a savings account, or let's say a current account, whatever account you are operating, particular that bank, you can go and you can approach them, typically like, I want to open a demat account. So whatever the KYC norms, whatever the other format is, you have to do. So it is very easy, you no need to worry on this. So your demat account is done. Once demat account it is done, either you can do it by your own if you are expert in the market, like I want to do by my own, I don't want to take anybody's, you can do this. For that, demat account is only the necessity. You are already done, so you can do it. The other way you can do this, no, I'm not so expert, I don't have time, and I don't want to boil my own hand. So what you can do actually, you can take even a lot of expertise, a lot of even advisors are there in the market. There are a lot of players also, big players, even big MNC companies also there. You can also take a help of them, but there you have to pay a charges, right, which is their transaction charges. So that is again depends on the company. So that and all, you have to just check it out which company you are going to open, and you have to talk to them what are the charges when they are going to take it from your all the transaction, whether you are buying or whether you are selling, both sides it will be, you have to pay for this, right? So I'm clear now. So to open a demat account, why I need to demat account, why I need to open a demat account, what is the importance of this demat account, right? And how can I take help from someone else, or else I can do it from my own. So all these things are clear now. Now in share market, what is happening now, you can choose even your sector. There will be a list of list of portfolios, list of companies, list of even sectors you can get once, let's say once you are started with the trading market. So you are the open to choose even everything. You have every freedom. Let's say today I want to go with A company, today I want to go with B company, today I want to go with C company or D company, whatever it is. So you can buy based on the price, again the same price, how it will be, again on the same even NAV rate, same even on the equity, par equity shares. So today let's say if it is 10 rupees, today if it is, let's say it is 20 rupees, the same way it will be calculated the earlier what I told you in the mutual fund. So again if I invest, let's say it is 1 lakh, and let's say particular share equity price it is, let's say for 10 rupees, so 1 lakh divided by 10, it will be 10,000, it will be my own shares. If the shares price goes up, my money also will go up. If the share price gone down, my money also will go down. So typically mutual fund and shares, if you look out, it will be working in the same way. Now another difference is, now I understood like the fundamental part of how share market even I need to invest, even how even mutual fund works. So first fundamental difference I'll just tell you. The one thing is, in share market you are open to choose anything. You can invest wherever, whatever the sectors, whatever the equities, you can invest. But in mutual fund what happens, you have to choose the particular fund, and there is a particular fund manager. They will invest whatever funds they are going to invest. You cannot change it. That means you are not independent to choose any fund over there. It is a particular wild fund, it's a particular, let's say energy fund, whatever it is. Now I am the, let's say example of fund manager. So whatever the investment portfolio I kept it, I will invest pulling all the money. This is my decision, I am going to invest over there. So you cannot advise me, you cannot change it. With my investment you are going to get the return. So that is the one fundamental difference between a share market, between a mutual fund. Because in share market what is happening, you are choosing, but in mutual fund you are giving the money to a fund manager. Particularly let's say he is pulling all the money and he is responsible, he is investing on behalf of the company. Yes, with all norms and conditions. It is not like he, as per his wish he is going to invest. It is not like that way. I earlier also I told you, the Security Exchange Board of India, under all the norms and conditions, even they have to follow if it is a registered company, right? So the investment pattern, what I mean to say, you cannot choose, the fund manager will choose. One way you are free, because okay, he is taking all your attention. In equity market you are taking your own attention. Clear? This is one of the fundamental difference. Again in mutual fund what happens, you can invest even systematic option, even you can do the lump sum. In share market again you can do the same thing. Either you can play even an intraday, typically it is called intraday. That means particular day you are investing, and let's say the very next day, or let's say after 2 days even your money is up, you can take out the money. But in mutual fund what happens, initially there will be a 6 months lock-in period. See, ideally I will tell you, money wherever even I am investing, whatever the tool, for what purpose I am investing to get a lump sum. So if I'm not investing for even 6 months also, there are some companies when they might tell you even for 3 years also. There are some even plans, even if I talk about ELSS fund, that is also there in mutual fund. So what is ELSS fund? Equity linked saving scheme, where you can save your tax also, but the lock-in period should be minimum 3 years. So there is no sense also, if you might be looking, oh no, then mutual fund is not even that much open like a share market. So as I told you, there is always a pros and cons even everywhere. If you are keeping your money, even though let's say 6 months, or let's say it is 3 years, whatever it is, so what you can get, you just tell me, even though by 6 months whatever you are going to invest, what prediction you can also expect. It will be not a huge difference. So let your money over there, let your money even be there. The fund manager, the person who is taking care of your fund, let him run, let him get some good market, and then you will get the whatever you have invested, then you are going to get the money, whether it is 6 months, whether it is 6 years. So you are going to be benefited. So it is not like that today only I am putting and tomorrow only I am just taking out. That way it is not going to work in mutual fund. Similarly, in share market, if your luck is good, if it is favoring towards you, then definitely you might get a strong even result by 1 or 2 days, or let's say by 1 week, or let's say by 1 month. So what is happening, you are taking your profit and you are happy out of it. But if it is, let's say, going down, again there is no guarantee, whether it is mutual fund, whether it is shares. If you look out, even there is no guarantee, right? As I told you, this all depends on the market price. It's all depends on how the like particular even exchange and stock exchange even works, how particular day the market is firming, or let's say market is going down, how the other even government, like norms and condition, the company's norms and condition, whatever their profit and loss, everything even captures in both the cases. Especially in share market, if I look out, because there you are open, right? So these two are a very risky, high risky tool. But yes, it is not like you are only going to boil your hand. It is nothing like this. It is also the wisely, as I told you, if you are going to look out even good wise investment, both the tools, whether it is mutual fund, whether it is shares, when as I told you the pros and cons, everything, you are definitely going to get some money also. And as I told you, there is an intraday, even the share market, there even you can leave it even for a long term also. So let's say today I'm just again dumping some money, even let's say I know this stock, this company is going to be definitely a boom even another 3 years, 5 years. So you just dump your all money, and then what will happen after 3 years, 5 years, when this rise will happen, let's say the price will go up, then what you are going to do, you are going to get the cream out of it. So this is the fundamental of both the tools, whether you talk about mutual fund, whether you talk about even share market. So both the ways, if you look out, yes, pros, cons, you have to check it out. You are the owner, you are the decision maker. So you have to choose it wisely, whether it is fund, whether it is share market, whether it is security market, whatever it is, I need to check it out. Again, if you ask me, yes, the best investment, if I tell you, yes, the part of investment what you are saving, I suggest you at least not even 5 to 10%, you should not invest more over this kind of tool. The reason is, see, as I told you, the tool is very high risk. It is a very high risk tool. But again, if you're, let's say, if you're dumping all your money in one bucket, let's say it is mutual fund, or let's say it is share market, the way when I told you it works. So even though it is going down, you are going to lose everything. If it is going up, definitely you are going to get everything. But who will give you the guarantee? Nobody. So that's what I'm telling. Out of your savings, at least 10%, 5 to 10%, depends on your saving, depends on the lump sum and what you have in your saving. Based on that one, I'm just telling you, you can invest 5% also, let's say, in mutual fund, even though it is SIP, even though it is lump sum, as I told you, one shot, or let's say even though for intraday, even though for even for a longer term, even for equity market, right? So thanks for watching me. And as I told you, every time, that this is all about, even with my experience, I'm just sharing. So I'm not going to promote any of the tool, I'm not going to even promote any of the company or any of the particular even fund or anything. So it is with my even experience, I'm just sharing it. If you like it, definitely go for it. If you don't like it, no issue. It is up to you only how you are going to make your own portfolio. There's some suggestion I'm just throwing over here, right? Thanks for watching. Have a great time.